Good morning, Mark Soderberg with ADM Investor Services with your morning ag market update. Lower trade in the feed grains this morning, steady to a penny lower in the corn, while wheat is off 1 to 2 cents. Higher in the soybean complex, however, beans right now stretching out to new highs, up 6 to 8 cents. Meal is up $1, while bean oil prices have rebounded about 40 points. The official reopening of the federal government seemingly having little impact on trade overnight, as the House vote was widely anticipated. I'd imagine the USDA and CFTC will outline a schedule for the release of the backlog of delayed data soon. U.S. stock indices are slightly lower, as is the U.S. dollar, while crude oil has rebounded about 50 cents a barrel. We will get our weekly ethanol production later from the EIA later this morning. Production last week is expected to have slipped a little bit down to 324 million gallons, down from the all-time record from the previous week at 330 million. If this figure is realized, it would be above the pace needed to reach the USDA corn usage estimate of 5.6 billion gallons, or billion bushels, excuse me. Reuters poll shows traders expect U.S. corn production will fall just over 250 million bushels, with the average guess coming in at 16,557 million. Average yield at 184 would still be a record high, however, off from the USDA number at 186.7. Ending stocks, however, are expected to rise slightly to 2.136 billion. This due to larger carry-in supplies from last year's crop and lower feed usage. Soybean production expected to slip just over 35 million bushels to 4.266 billion, the average yield falling to 53.1. Still a record, however. A huge range in ending stocks, as traders have a pretty wide range of ideas of what the USDA will do with their export forecast. The low end of the range is just under 190 million bushels, with the upper end nearly 500 versus the 300 million bushel ending stock forecast from September. The average guess is for that to rise about 5 million bushels. U.S. wheat ending stocks, they're expected to climb roughly 25 million bushels. This due to the higher production figure that we saw at the end of September, just ahead of the government shutdown. D's corn hovering just below its October high of 437. I think we're going to need to see yields slip to about 180 bushels per acre in order for ending stocks to drive below 2 billion bushels, in order to see prices maybe extend up to 450 or higher. We do have major support below the market at the 100-day moving average at 419.25. Jan beans, they have stretched out to a new 17-week high overnight, as speculators continue to pile on the long side of the market, and this despite no indication of Chinese interest in U.S. soybeans. U.S. FOB offers at the Gulf right now are pretty close to that being offered from Brazil here through the end of the year. As we stretch out into next year, Brazil becomes cheaper as we get deeper into their new crop harvest. I wouldn't be surprised if the reopening of the government ultimately causes this recent price surge to fall back a little bit, as we start to see just how little Chinese buying we've seen to date. While I also suspect that we've seen a pretty sizable buildup in speculative longs in the soybeans. The 50-day moving average is now becoming support here for December oil, that at 50.32. In tomorrow's report, I'd also expect to see a sizable cut in bean oil usage for biofuel production, with some of that demand shifted into other domestic usage and exports. D's wheat in Chicago and Kansas City can't seem to get too far away from its 100-day moving average. The Rosario Grain Exchange did up their Argentine production forecast another 1.5 million metric tons to a record 24.5. That's well above the USDA forecast of 19.5. Thanks for listening, everyone. Have a great day.